What is the difference between long and short in crypto futures? In futures trading, the first big decision is direction. You are not simply buying a coin and waiting. You are opening a position based on where you think the price will go. If you expect the price to go up, you open a long position. A long position is designed to make profit when the price rises. For example, if Bitcoin is at $60,000 and you open a long position, you are saying, I think the price will go higher. If Bitcoin moves from 60,000 to 63,000, that long position can move into profit. But if Bitcoin falls from 60,000 to 57,000, the long position moves against you. That means your trade is losing because the market is going in the opposite direction. Short is the opposite. If you expect the price to go down, you open a short position. A short position is designed to make profit when the price falls. For example, if Bitcoin is at $60,000 and you open a short position, you are saying, I think the price will go lower. If Bitcoin drops from 60,000 to 57,000, that short position can move into profit. But if Bitcoin rises from 60,000 to 63,000, the short position moves against you. This is the part that confuses many beginners. Opening a short position is not the same as simply selling a coin you already own in spot trading. In futures, short means you are opening a trade that benefits if the price goes down. You are trading price direction, not just buying and selling coins. So the simple rule is this: long means you expect the price to go up, short means you expect the price to go down. But both can lose money if the market moves the other way. This is why risk control matters. A long trade can use take profit and stop loss. A short trade can also use take profit and stop loss. The direction changes, but the need to manage risk stays the same. This idea is also important for futures grid bots. A long bot is usually built for a market you expect to move upward or recover from dips. A short bot is usually built for a market you expect to move downward or reject higher prices. A neutral bot is designed for a market moving inside a range without choosing one strong direction. So before choosing a bot, you need to understand the direction. Long is not better than short. Short is not more advanced than long. They are simply two different ways to trade the direction of price. Long, price up. Short, price down. Wrong direction, loss. That is the basic idea of long and short in crypto futures.